Good afternoon, ladies and gentlemen. Welcome to the ZOTEFOAMS PLC Interim Results Investor Presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time using the Q&A tab just situated on the right-hand corner of your screen. Simply type in your questions at any time and press send. Given the attendance on today's call, the company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and will publish those responses on the Investor Meet Company platform. Before we begin, we'd like to submit the following poll, and if you could give that your kind attention, I'm sure the company would be most grateful. I'd now like to hand over to the team from ZOTEFOAMS. Gary, Ronan, good afternoon.
Thank you, Mark, and good afternoon, everyone, and welcome to the H1 2024 interim update for ZOTEFOAMS. I'll get straight into the deck. I'll take the important information as read. Okay, so H1 performance, record performance in both revenue and profit. Group revenue up 10% to 71.1 million. That drove a profit before tax to a record of 8.3 million, so up 12%. And net of the investment in resource, driving a record profit of 10.5 million. Gross margin saw improvement of 40 basis points to 33.2%. The real engine for growth in H1 has very much been high performance products, and within that, the footwear business with Nike, and that grew by 37% to 36.1 million. I'll go into quite a bit more detail on the drivers behind that later in the presentation. In terms of the sort of key highlights, the footwear business, as I said, is a real engine for growth. So a continued strong performance with that partnership with Nike. And there are a number of factors around that. So some particularly supporting tailwinds around one, the Olympic year, which always sees an uptick in demand for running shoes. Two, a supply chain reassortment within Nike, which seeing quite a few volumes moving from Chinese manufacturing to Vietnamese tier ones, and then building inventory as that shifted. And then three, around the Red Sea blockages and delays, which we saw some of the supply chain folk building up inventories around that. So, significant tailwinds that have helped, and we would expect that demand to moderate somewhat as we go through H2 and beyond. We started our investment in North America, and that's an investment on growth. It will also support operational efficiency. This is essentially bringing in a new low pressure autoclave, which will allow us then to retire some older equipment that is less efficient. So this is going to have a dual impact of helping us increase volume, but also to greatly improve operational efficiency. And we see that coming on track in 2025, but ground has been broken this year to allow space for that, and that project is well underway. And then we have the resource circular packaging business. So significant progress here. We had a media event in May where we were able to announce Refresco as our joint development partner. They have been working with us since back in 2023. And this year, in May, they felt suitably confident about our progress in this to break cover and actually stands shoulder to shoulder with us, announcing that they are working in detail with us in their facilities in Spain to continue the development of this product and to bring it to trial, to then bring it to market. We're right now looking for a strategic investment partner in this business, but again, I'll go into more detail on that during the course of the presentation. And then the Shincell Global Alliance, an alliance that's centered on sharing technical capabilities. Really for us to learn some of the new technologies that they have developed and bring that into our manufacturing portfolio. But also there's a commercial collaboration around the Global Alliance where we will work with Shincell for them to access markets where they've not previously been able to penetrate it, and also us buying some products that they have developed that we would not necessarily look to manufacture ourselves. So you know, a really exciting alliance that we formed with Shincell. Going into the segment performance, what we'll note here is that the high performance products, for the first time, at least as I can see in the history of ZOTEFOAMS, our revenues exceeded those of the polyolefin foams. So revenue at 36.1 million versus the 34.4 million in polyolefin foams. Very strong margins in high performance products, significantly lower margins in polyolefin foams, and that comes from the mix of products that we manufacture there. I'd say there's two parts to this that I'd stress. One is the work that's been done in EMEA on mix enrichment, which continues to be successful at improving gross margins there. In North America, there's certainly an opportunity for improvement, and this ties in with the LP2 investment that I mentioned in the earlier slide. So that investment around retiring old assets, bringing in modern assets that will improve productivity, improve gross margins, and also improve overall yield and output. I touched on the strong footwear sales, you know, really strong at 40% growth. As I said, there are those tailwinds that we need to bear in mind there. And then decent growth around the smaller sectors of T-FIT and ZOTEC-F, ZOTEC-F being the aviation-oriented product. Albeit those sales are always relatively low in H1, and they are coming off a relatively low base in H1 in 2023. Sort of delve into a little bit more detail on the three areas. First, in high performance products, as I said, footwear really dominates this part of the business, and the partnership that we have with Nike has really seen us drive those sales in H1. As I said, those tailwinds do need to be noted, and I would imagine that will moderate as we go through H2 and beyond. As those particular elements subside in terms of influence in demand. I'd mentioned T-FIT growing significantly at 23%, albeit off that low base. And then we've also got the significance of a new agreement with Design Blue, which is focused on our nylon products, so high-grade foamed nylon products that they are using in body protection. And as I said, I'd also mentioned around Shincell technology development, allowing us to access that technology, which also drives a lot of flexibility and adaptability about our manufacturing processes and gives us optionality in terms of modular manufacturing that could allow us to install facilities closer to some of our customers. So giving us access to that modular manufacturing capability. We look at the polyolefin foams. As I said, the mix enrichment continues with progress in EMEA. US, we could do better. That low pressure vessel, I stress, being very important in terms of driving the operational efficiencies there in 2025. So good progress on that self-help project. Overall drivers of inflation in this area, which has been a significant factor in recent years. We've seen the low density polyethylene prices come back actually below the long-term running averages, so well off the peaks that we saw a couple of years ago. And we've seen relative stability around energy prices, and the only significant sort of inflationary pressure that we see is around labor these days. And then we come on to resource. As I highlighted, a big key event in terms of May 24 with the announcement of Refresco as our partner. At that event, BIFA were also shoulder to shoulder with us, talking to the industry and the wider interest groups around circular packaging as to why they support this development. This is a mono material. It's a disruptive carton that we are producing that is 100% recyclable and indeed can be manufactured with a high degree of recycled content. In H1, we invested about 2.2 million in operating costs, And then we had 2.6 million of capitalized investment. Some of that in equipment, I think it's about 800,000, and then other portions of that of activities that have been capitalized as per accounting rules. As we head into H2, critical moments for us are around both sterility and endurance testing, which is sort of milestone number one, really key. And then following that, it's moving to market trials. I've been engaging with Refresco, our development partner here, and they're super excited about the sort of progress that we've made in this innovative packaging. The interesting thing is that they try to get us to understand the complexities of making refinements around packaging to get it to manufacture at scale. So they complement us, so ZOTEFOAMS and the resource team, with the very bold timelines that we lay down for things like endurance testing, sterility testing, and market testing. And they're there side by side with us, giving us the access to their facilities in Spain to allow us to continue the development around that. But we are setting ourselves to ambitious sort of timelines around that. We have to also understand that this is an iterative process. This is a disruptive, new, innovative technology, and it will continue more refinements. But what I would really stress today is that all hands are on deck. We've got an amazing group of talented people that are focused on this, working with our partners at Refresco, working with the people at Sudpack, and also with some guidance as well from people that are going to be net beneficiaries of monomaterials, the likes of BIFA, who are hugely supportive and want to see this technology getting adopted, because it really helps address a significant issue in terms of recyclability in this market. I'm just going to hand over to Gary, who's going to bring us through some more details on the finances. Gary, over to you.
Thanks, Ronan. Start with key performance financials headlines. Ronan's already touched upon the group revenue, record number 71.1 million, up 10% on the previous period last year. That actually includes a headwind of 1.8 million on FX. So that would have been 13% up on a constant currency basis. And as Ronan mentioned, it actually is the first time that we see HPP taking over as the lead business unit, with 36.1 million of revenue against a 34.4 of polyolefin foams. At the gross margin level, we're up 40 bips at 33.2%, which represents 2.4 million pounds on 6.4 million of additional revenue. And that also, in turn, has a 1.1 million FX headwind in the period. Operating profit of 9.7 is up 14% on last year's 88.5. If you actually break down that 9.7 or the increase, 1.2 million, 1.4 million is the foams business up, which represents 13% increase, and then we've increased the investment in MuCell from 2 million last year to 2.2 million. So that's actually the loss is up 10%. Profit before tax, so after the interest charge, is at 8.3 million. I'll talk about some of the more details in the next slide. Up 12% on the previous period, and that also includes a FX loss of 0.3 million. Whereas in the previous period, the 7.4 included a 1.1 million gain. EPS is up 12%, similar to PBT growth, 12.889p, and the interim dividend is up 4.4% at 2.38p. If I move into the next slide, which is a little bit more detail, I mentioned revenue I've covered, gross profit up 2.4. As I mentioned, that's obviously increased sales with a slight increase in margin. We're investing in cost. We've obviously got the labour cost inflation impacts, and that together with also investment in our Polish and US operations takes us to that 2.4 million increase in profit. SG&A is up 9%. It's actually up a bit more. Within here we put our hedging movements, and last year we actually had a hedging hedging gain, whereas this year we have a hedging loss. In both cases, 500,000. So there's actually a 1 million swing. And so the additional increase really is down to increased marketing costs, increased labour costs for pay rises, additional people, and board changes. We've been lucky enough to have almost effectively 2 CEOs for a period. Operating profit, as I said before, was 40% up at 9.7, and you can see 50 bps increase in the operating profit margin. Interest charge really only related to an averagely higher debt level, and when compared to the first 6 months of last year, higher interest rates. We draw down our debt entirely, not in sterling. We draw down it pretty much 50% in US and 50% in euro. Tax charge, we're fairly simplistic in our approach to tax. So you can see we're very close to the UK corporate tax charge of 25%, coming in at 24.2. Most jurisdictions we operate in are fairly similar. We have tax losses in the US, but we didn't generate sufficient profit to make a big impact on that average rate in this period. I mentioned EPS and dividend, and I broke down that operating profit split previously. If we move from performance to balance sheet and capital allocation, EBITDA was 14.6 million, up 8%. We adjust our EBITDA for IFRS 2 and 16, so that means we ignore the share incentive charge, as well as finance lease related interest charges. That EBITDA was used to generate to invest in capital expenditure, up 3x on the previous year at 8.1 million. We talked about the projects, but I've got a slide coming up next that breaks that down a bit further. Working capital, the increase in the period was 5.9 million, compared to the increase in the previous comparative period of 6.5 million. I'll touch upon that in more detail on the next slide too. The final dividend was paid in June. We announced in the annual report, so that was 2.4 million, up 6%. And that takes us to a net debt of 35.1 million, excluding leases. I have a chart to show the waterfall on net debt. There's a little bit of complexity now that our finance leases are material versus what they have been in the past. So this is the excluding the leases, and this is up 4.9 million from 30.2 at the end of the year or beginning of this year to the 30th of June 2024. And leverage comfortably within covenants. The covenant's 3.5, we're at 1.4. We know that 2 is starting to get beyond certain people's or investors' appetite. We're comfortably below there, and it's just up a tad on the beginning of the year, which is or last year, sorry, 12-month rolling, which is 1.2. If I move on to, like I said, just break down a couple of the elements previously seen. Capital expenditure. Rowan's talking about the projects, right? The resource project, the second low pressure vessel in the US, and Shincell. Together, they represent 65% of our H1 capital spend of 8.1 million. And consensus for the year is actually at 20 million. So you'd see that we're expecting an uptick in the spend in the second half, but very much still led by the resource and second low pressure vessel in the US. If we move on to net debt, as I said, that's a tricky picture, and I hope this kind of helps explain it more clearly. Under accounting, including finance leases under IFRS 16, our net debt moved from the beginning of the year at 31.6 to the end of the period to 44.6. That's a 13 million increase. The 7.1 million of that is the Shincell lease. That is a 5-year payment of 80 million RMB, and what we effectively have to do under accounting is recognise the asset as a right of use asset in the top half of the balance sheet, which we are depreciating over 10 years, and as a liability in the bottom half of the balance sheet that we are recognising as a liability and paying down over 5 years. And that is discounted because it's over a longer term period. If you exclude those, our net debt effectively, and that's the representation that I showed in the previous slide, or previous to previous slide, our net debt was 30.2 at the beginning of the period, and it rose 4.9 to 35.1 at the end of the period. That we effectively have 14.6 million of headroom, and that's the 1.4 leverage. That increase in debt is driven by the free cash flow of 0.8, which is the EBITDA being used to invest in capital, working capital, pay off interest. Then we have the dividend and the tax primarily driving that increase in debt. My final slide is just a little bit more detail on the cash flow, and I've covered a number of them, but the one I obviously haven't covered yet was the working capital. And you can see there effectively increased activity in the business, higher revenues leads to increased receivables and indeed increased payables, which net to 0.8 million. There's no change in payment terms. There's no change. There's certainly no changes in our recoverability of receivables, but the increase is impacted by just nature of mix. As we've increased our footwear sales, those footwear sales are slightly longer term on the basis that the customers we supply to are based in China and Vietnam, and therefore have slightly longer payment terms than you'd expect if you were selling to someone in the UK. A bigger driver, as you can see, our big driver is inventory in the period, and that is driven almost entirely by the footwear business and the PVDF, the ZOTEFOAMS business, the aviation business. Indeed, 80% of that 5.1 million increase is related to those two. Very simply, with footwear, it's the increased activity, and with ZOTEFOAMS, it's two factors. It's partly the impact of the price increases we referred to. We had a doubling of the cost of the raw material, which we referred to in the annual report, and that is having an effect on this increase, as well as the fact that the nature of the product and the way it's produced and the uniqueness of it, when it's not something we buy on a weekly basis. We generally buy 2-3 times a year, so you tend to find a bulk purchase, it increases inventory, then it gets consumed, and then there'll be another one later on in the year. And so we've effectively bought more than we need for the period in question, but what we need to have to take us through the year before the next purchase. So that fundamentally drives the 5.9 million increase in working capital. I touched upon the 0.8 million free cash flow movement, as well as the increase, and I touched upon the movement in debt. As you can see over to the right, the movement from 30.2 debt to 35.1 excluding leases. And with that, I pass you back to Roland.
Brilliant. Thank you, Gary. I'm going to move on to sort of share some first impressions and some reflections and some priorities for the business. But before I do that, I think it's useful to sort of pause and think about the foundations and the sort of the core of ZOTEFOAMS, what I would call ZOTEFOAMS DNA. And a few things really strike me. And I guess what I would really want to stress is that these will remain the sort of building blocks on which we will continue to grow the company. And as we create new growth curves that see the company continue to grow into the future, these will remain really important. So first is that foundation around IP, and I would say on top of IP is just incredible know-how around our manufacturing processes that does very clever things with a whole variety of different polymers, and that needs to be and will continue to be very much at the heart of what we do. If we look at all of our products, it exists at the heart of the products that we develop. Like the other thing is around people. What's really impressed me, what runs through the organization is the STEM talent, the number of employees that are scientists and engineers, and this business needs to continue to bring and develop that talent, and that absolutely is what we will continue to do. And then sustainability. As I've sort of went out and tried to understand the foam market, what really stands out is the different nature that our manufacturing processes go through, how they are, super clean and very different from many other foams that are out in the market, particularly those that are chemically blown foams. And there's a real sustainability edge to what we do. So how we make things, and then what our products are actually doing, and the different attributes that are conferred on them by the manufacturing processes. And then there's innovation. So process and product innovation has been important to ZOTEFOAMS, and I will touch on this in a minute. There is an opportunity, I would say, to really amplify that and ratchet up what we do in the space of innovation. So if I take my first impressions, if you look at the market in which we operate, the fundamental, the foundation of the business, we are the manufacturers of cross-linked microcellular supercritical foams, and we are the leaders in that market in EMEA and North America. And we absolutely lead in this space, and our manufacturing, once we talk about alliances and developing manufacturing processes and new technologies, I would just want to underline that the existing processes are really great processes and achieve very neat things with the polymers that we work with. And that sort of comes to the chemical flexibility is that range of polymers that we can work on and then create different high value materials. And those high value materials give us access to many different markets. Depending on how one looks at it, we are supplying directly or indirectly into over 20 markets. And I certainly can see in my early days here, 11 weeks as CEO, that there are real opportunities for business expansion in a number of those high growth markets. Not at all, but there's an opportunity to focus in some markets with a greater runway for growth, and where potentially we can move along the value chain. The relationships that we have as a business, both with our suppliers, but also some of those key customer relationships. Obviously, the Nike relationship stands out. It's been an engine for growth in H1. As an organization, I firmly believe that we've got an opportunity to build more relationships, and I do believe that we have to build more really strong, lasting partnerships in other markets as we look to create the next growth curve for the business. We've been very successful with Nike. That's a wonderful partnership. We want to replicate that, do more of the same in other industries. And then obviously there's the resource circular packaging business. I guess it's not often that you come into a business and you find a startup within the business, and one with IP, with disruptive technology, and with an industry that is really welcoming it with open arms and willing it on for success. So that for me is exciting, but it is a startup. And the development of a startup product, it is never entirely straightforward. It's not absolutely linear. And as I said, our partners at the likes of Refresco tell us to be aware of the iterative process that you need to go through to refine technologies to get them to market. That's exactly what we continue to do. What's really struck me is the amount of sort of goodwill around this, and as I say, the amount of people that want to see this as a success. Okay, and then sort of reflecting on all of that, and this is based on having visited a large amount of our customers, certainly customers that represent more than 80% of our revenue, and they have reaffirmed our position as that leader in that low density microcellular block foam. It is recognized. Our product is recognized as a premium product, and for that reason, I genuinely believe that we've got a right to win further down the value chain in a number of markets, and I think I would see that as an opportunity for the business. I've touched on emerging technologies. I've touched on the alliance that we have with Shincell, which leans into that, and I see that technology acceleration with partners being really important to allow us to get closer to our customers, So to allow an element of flexibility and agility around manufacturing infrastructure that allows us to essentially grow not only from our core bases in the US and in Europe, but also to look at lower bars to the capital investment required to expand in other areas. As I said, the product that we make, our foams, really push into the mega trends of the moment in terms of cleanliness, so clean products, clean manufacturing processes, lightweighting, durability, and sustainability with all sorts of technical performances depending on the mixture of polymers that we choose to use in our manufacturing processes. But all of this will require more and more innovation in business, and I think that the business has innovated strongly in the past. I also see an opportunity for really investing more in innovation to essentially create that next exciting growth curve for the organization. Innovation and innovative products that are both customer-led and supplier-led are going to be absolutely key for us. We need to be close to our customers, we need to be close to our suppliers, and we need to really build up the current platform and accelerate and expand the amount of innovation that we as an organization are involved in. So over the last few months and looking forward, I've been looking at the sort of opportunities and those early wins. I've been working with the team to reorientate ourselves from a product-led business, so one that talks about just distinctly products, but one that looks at markets that can help us identify those markets with that runway for growth, where we can go essentially narrow and deep. So where we can become experts, where we can move along that value chain and not just sell foam, but be solution sellers and move further down the value chain in some really, really attractive high growth markets. Right now, we're refining the commercial strategy. We're a case of realignment of teams, but also bringing in some new talent into the business to really help us with this orientation to customer and market focus. Driving integrated regions, so full P&L responsibility, and we had divisional splits which cut across regions and actually allowing regions to manage their performance top to bottom, whether that's the US, whether that's EMEA. And then leaning really hard into this new technology. So I want to reinforce the qualities of the existing autoclave technology that we have. That has been built up over 100 years. It's incredible know-how and very, very successful, and really the best in class for those particular niche markets that we operate in, but leaning into new technology to allow us to open up new opportunities. And right here, right now, we're looking at resource in terms of driving that market readiness. So working hand in hand with Refresco, bringing all the talent together to ensure that we hit those real critical milestones in terms of endurance, sterility, market trials over the coming months and beyond, to ensure that this product is a success. As I said, we've set some really aggressive internal timelines, and they are important, and we will keep to those. We will keep setting those aggressive timelines, but also we need to be very mindful of the iterative nature of the way that new product introduction and innovation, it requires you to be agile, and that's what we are having to be. But I would just stress, as I mentioned, that Refresco are there with us. We continue to be in their sites, working in their facilities, working on the ongoing development, steering towards those critical milestones. And then in the future, so as I look to refine the strategy in the coming months, I see the opportunity to get closer to our customers. So that is both geographically and moving along that value chain. It's driving vitality through a new approach to innovation. As I said, putting more into innovation and ensuring that we're innovating at pace and with a breadth and depth that's going to help us create that new growth curve. I mentioned about M&A and our right to win in certain areas. Our product confers a huge amount of value on the end products that our foam goes into. There are opportunities for us beyond the core where our foam is critical to end applications, and I think that it is entirely within our right to look at the value down the value chain. And then a resource, which I've mentioned quite a lot in terms of the monetization. We are looking right now in terms of those critical milestones, but in parallel to that, we are actively talking to potential strategic partners from a range of different areas, be that LPB manufacturers to polymer suppliers to financial investors who we have been talking to about potential strategic partnership to allow us to scale up and bring resource to market. So as I look at the priorities for the business, commercial transformation, I talked about that right to win and going deep into 5 or 6 key markets. The resource, circular packaging, I guess I'm going to say it 7 times. It is super important. It's got all of our focus, and it continues to be a top priority item for us as a business. M&A has not been something that we have done a lot of in the past as ZOTEFOAMS. We're not looking to bet the farm, and this will be about a smart margin accretive M&A. You know, we would start with bite-sized opportunities, I would say, but this can be transformative. There are industries that we can go into that where there are consolidation opportunities where our foam is super critical. Innovation, I repeat, ultra important for the future. Building also that technology capability, getting the flexibility from the technology that we've entered or that we've got access to now, thanks to the alliance that we have with Shincell. And then global leverage. This is really about joining up the company. It's making sure that the whole is greater than the sum of its parts. We've got some fantastic facilities. We've grown over the last decade. We've spread out a little bit. There are day-to-day operational efficiencies that we can drive within the business. And we're also very mindful that we need to drive cost effectiveness in the business and ensure that just doing the basics, that we're doing it absolutely right. And that is about taking the rest of the organization to the best performers up to that level, and then looking outside the organization and ensuring that we're bringing best practice into everything that we do. So if I summarize, you know, a really terrific first half, really strong sales growth, a really good profit growth. HBP, the engine, there'll be some moderation in the footwear market. Polyolefin foams, EMEA continues with that rich enrichment strategy, which I completely support. We need to continue with the work to be done in North America, which the investment around the LP2 will absolutely help. Resource, absolutely key, and Shincell, that technology will be complementary and for us, and it's something certainly that we see numerous opportunities, or we believe we will be able to develop opportunities for in the near future. So coming back to outlook for the rest of the year, we are confident in our full year performance. We enter H2 with positive momentum. There will be some normalization of footwear. It's not necessarily immediate, but we have to be clear that sort of growth is not sustainable. It is driven, you know, large elements are driven by other factors. Resource is right there in terms of our priorities. It is super critical. It is, you know, it's been fantastic to see Refresco, to break cover, to come out, the collaboration that we have with them, the support we have from the industry and the likes of BIFA. We will continue our efforts in this regard in H2 as we develop this disruptive and innovative new product. And then finally, it's about building and executing the next growth curve. It's about really finding those new partners that we can bring onto the existing strong partnerships that we have. And it's also about really driving up innovation and ensuring that we bring new products to market that will assist us in bringing those new partnerships to the business. So with that, I think we are stopped the presentation and we'll move to Q&A.
That's great. Gary, Ronan, thank you very much indeed for updating investors. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab just situated on the right-hand corner of your screen. So Gary and Ronan take a few moments to review your questions submitted already. I'd just like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, will be accessible via your Investor Meet company platform. Gary, Ronan, you received a number of questions ahead of today's presentation. I know you touched on a lot of those points throughout your presentation, and you've received a number of questions throughout your presentation itself. Thank you, everybody, for your engagement. If I may just hand back to you just to read out the questions where it's appropriate to do so, and then I'll pick up from you at the end.
Right. Very good. Thank you. Okay. So forgive us while we sort of juggle some in front of us and some to the side of us. So let's just start. So lots to look forward to with Resource. Can you give a summary of how the industry responded when you launched in Amsterdam? Have you seen any reaction from the likes of Tetra Pak or others? As surely the disruption will be significant to them. Yeah, I think that we've certainly seen quite a reaction. We got a lot of press coverage, and yeah, I think that some of the incumbents that are out there absolutely have taken notice of this. So 100%, yeah, it's been recognized. This has not went under the radar. We never wanted this to go under the radar. We've got a lot of people both directly in the industry and around the industry looking at this. So 100%. Next question is from Gavin. Nike has seen serious share price fall, no issues for the PLC. Nike is a massive business. It's an incredibly successful business, and their share price fall wouldn't necessarily have any real impact on the relationship that they have with us. I think today Nike manufactures something like 800 million shoes. Our foam goes on the very, very, very pinnacle of those shoes, around about 1%.
And they have an apparel business.
And they absolutely. They've got the apparel business and many other sports as well. So thank you, Gary. Absolutely. Can you talk about the performance edge that gives Nike over competitors and how vulnerable you are to foam competition? Okay, so our foam we are selling to Nike to the highest performing end of their ranges, and I have got no doubt that competition are out there looking to come and take part of that space. So I think as an organization we have to be incredibly mindful of what could be coming up behind us, and that's absolutely why I'm talking about commitments to innovation. It's why we look at new technologies that can maybe allow us to do different things with other polymers. We cannot sit still. Yeah, we have to move forward and continue to develop next generation supercritical foams. That's our business. I'm confident that we can do it. But there's a competitive landscape out there. It would be naive to think that foams won't continue to progress and competition won't come up. So yeah, we've got to be ultra fit for that, and that's why innovation is so important for the future. To what extent did Nike encourage support collaboration with Shincell? They were not in any, they were not directly or even indirectly involved with Shincell. They're supportive with the flexibility and the agility that the technology could give us. So I think that they're super interested in it. But they have not been they did not lead us there. That was the intuition and the work of the ZOTEFOAMS management team that brought us there. But anything that allows you to be more creative, that can allow you to be more flexible, agile, that can get you closer to the customer, your customer's gonna love. And Nike as a partner love when we come with stuff that can help solve some of their problems. And so better performing product and maybe products that are better suited to exactly what they're doing. So no, they did not lead us there, but they're certainly, I think, happy that we can come with solutions and new stuff. The timing of resource trial has slipped from early 24 when initially announced in November. Can you provide more clarity on the timing and the amount of further investment required? Yeah, that's a great one. This is a new product. It's this is a startup business. It's an innovative new product. It requires finessing, improving. It requires many iterations to get it right. We have demonstrated the efficacy of the product in lower volumes. The concept is 100% understood. The product has been IP protected. Internally, we will set very demanding targets on ourselves, and that is extremely important. But as with any innovation and any new product, one needs to be super careful with laying down particular dates by which something will be done, because you just don't know. You don't know what you don't know. And I would just, what I would sort of try and convey to everyone is that the sooner we get this product to market and we get strategic partners on board and we can get the scale, the sooner we're making money out of this. But this is a new innovation. This requires, there's finessing work that has to be done on both production lines, and it takes time. It's just the nature of innovation. Okay. You have invested in resource through cost losses and also capitalized development spend. How much has been invested in total since you started with this project? Gary, do you want to?
Yeah, I got that one.
Yeah.
Before that, that one was coming. That's in the interim statement.
Yeah.
So capitalized to date, at the 30th of June, is 10.2 million. If you look at losses, we pretty much pivoted fully towards resource within our new cell business last year. Last year, we generated a loss of just around 5 million. This year, we're 2.2 million halfway through the year. The analysts pretty much doubling that. So that's 9. So together that would make 19. If you then just look back at maybe the element of resource prior to 22 or 23, not a lot. So a couple of million on top. So you're talking 20 to 22 million through the period.
Okay, thank you. There's a question here.
It's a long question here.
It looks tricky, so I'm going to give that one to you. Yeah, there you go. So
you say that various costs, with dividends being the largest, cause the increase in debt. Oh, the debt question. Okay. In debt over the period. This is tantamount to saying that you're borrowing to pay dividends. How do you justify that? Dividends or distribution of unneeded cash on the balance sheet, not something that should be paid by increasing debt. Why do you feel obliged to pay dividend? Oh, there's about 5 different questions in there. Investors prefer a demonstration of coherent capital allocation from management. I'm not entirely sure everyone would agree with you that dividends, you can drop dividends when you want. You have a duty to support your investors. I don't believe that we are. I mean, we have used the EBITDA, the cash generation, to invest and allocate capital the way we feel is appropriate, be it through returning some to our investors, as well as investing in working capital and net capital expenditure. I think we are a growth. We consider ourselves a growth stock. We do not pay. People are not investing in ZOTEFOAMS to become millionaires from our dividends, but we still feel, and we have consistently paid a dividend. Our policy is a progressive dividend. There's only 1 year back in 2020, for obvious reasons, that we held the dividend, but we're proud to be able to manage. I'm proud to be able to manage a balance sheet that enables us to allocate capital and direct some of that towards our investors.
Very good. Thank you, Gary. Okay, does the well-documented airplane supply shortage restrict short, medium, term opportunity. Actually, yeah, there are only so many aircraft builders. One of them's having and has had some challenges in the recent past. Boeing's build rates are set to increase over the coming quarters and years, but I think that they are forecasting that they're not going to get back up to rate for a couple of years. That said, I think the low point is behind us, and if anything, I think that there will be some modest tailwinds from build increases on the airplanes on which our products are specified. So I think actually we've probably seen the worst of it. Crikey, touch wood, feeling some other restrictions on build rates. But we should have seen the low point, and we should see those volumes increasing. What are the two major pieces of equipment for resource that ZTF will be acquiring in H2? Are they necessary for the 150,000 juice trial? So these are I know the names of the machines. These are forming machines essentially. Are they required for the 150,000 juice carton trial? Yes. We've got the machines. Actually, we've got all the machines that we require at this point in time for the 150,000 juice carton trial. Yeah. Might you technology enthusiasm refining commercial lead to better premium prices being charged? Past CEO is cautious in pushing for price rises for fear of losing customers. It's always a super delicate point in terms of price elasticity. I think that as I look along the value chain, what I would say is I see the opportunity for greater value creation. It's horses for courses. You cannot necessarily go out with blanket price increases. Some of the markets that we sell into are much more sensitive to others. So some of the products that we have are much more technical than others. So it's I think the pricing is a very important lever and muscle for any business. But there is not a one size fits all approach to it. But certainly I come to the business with a lot of emphasis on looking at pricing and ensuring that we are pricing sufficiently for the value that we create. Can you speak a little bit about the concentration risk with customers such as Nike and competition in the foam market that may jeopardize that customer relationship at some point in the future? This is a real significant point that we as an organization look at. Nike has become an incredibly significant part of the business. It is very important, and we need to grow other parts of our business. There is no doubt about that. I've mentioned about finding other partnerships, creating a second growth curve. So it is Nike as a single customer with that percentage of sales. It's been tremendous. The performance has been tremendous, but it is absolutely clear to me that we have to build more depth to the customer base, to those significant customers that are really growing in the way that we can do with Nike. So let's use Nike as a fantastic example as how we can build other relationships at ZOTEFOAMS. But we have to. We absolutely have to. We cannot assume that business will be there forever. Yeah, it's just that would not be right. Okay, as a new CEO, do you envisage a much larger group in terms of revenue and profit over the medium term? I'm here to grow this business. I am here to drive significant growth. I am here to with the team to create the next growth curve that really drives huge value in this business. So absolutely, yeah, that is my agenda, is to find those new partners. It's to find and develop those new products that create the next growth curve for ZOTEFOAMS. Okay.
I think, Ronan, I'll just jump in there because for every question you seem to be answering, there's another 2 or 3 that keep coming your way. I think there's a theme of the questions, and I think you've touched on them throughout. But of course, what we'll do is we'll provide all the questions as we come up to the hour now, and any additional responses, we can publish those back to those on the call. So thank you, everybody, for your engagement this afternoon. Ronan, I know investor feedback, Gary, I know investor feedback is particularly important to you both, and I'll shortly redirect those on the call to give you their thoughts and expectations. But I wonder, before doing so, if I may, Ronan, just come back to you for a couple of closing comments, and then, as I say, I'll ask investors for their feedback.
Thank you, Mark, and thank you everyone for joining the call today. As we mentioned, Gary and I, this has been a very strong H1. We are going into H2 with momentum. We have got a number of significant strategic initiatives that are very exciting in the business, that will really set foundation for, as I say, the next growth curve for the organization. I'm delighted to have joined ZOTEFOAMS, and I'm super excited about being part of the next growth phase of the business. So it's been a pleasure taking on this role. It's been a delight to present H1 results for the company, and I look forward to continuing with the progress of the business.
That's great. Ronan, Gary, thank you very much indeed for updating investors this afternoon. Companies ask investors not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the company can better understand your views and expectations. This will only take a couple of moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of ZOTEFOAMS PLC, we'd like to thank you for attending today's presentation. Good afternoon to you all.